Hey traders, welcome to Charts and Coffee. Hope everyone is doing great. Shout out to Paul Winter. I don't know if you're out there, loving the mug. Got a little triple espresso going on today. Hope everyone is doing great. All right, couple things before we jump into the charts, and of course your questions, type them on in. First come, first serve. We'll just go right down the list. And my Sector Secrets Mastery folks will be jumping into our room in about 20 minutes here. All right, so let's take a quick peek at what's going on in terms of what we're dealing with. I think a lot of you probably already saw the core retail, Empire State Manufacturing. We've got Lagarde coming up right now. So you know what, before we get to the questions, let's do this really quickly. Let's take a quick look at three key markets: the euro, the S&P, and bonds. All right. And I'm going to go ahead and just move this daily time frame to the right here. We can still keep an eye on where we are in relation to the previous close. We are below the previous close. So a little bit of bearishness. We have the 1 hour chart here, which I love. This is allowing us to trade a little bit more longer term without the far longer time horizon expectations, requirements even of a daily time frame swing. But here is our 5 minute. This 8:30 candle, that's core retail, wick to the downside, move back to the upside, and we're just sort of holding here. And of course, Lagarde is coming into the market. I don't see any major Lagarde headlines coming through yet. All right. So that's the S&P right now. Let's take a look at the dollar via the euro, right? So we're taking a look at the dollar. What does the dollar have to say? But we're taking that assessment through sort of the lens of what is the euro doing. If the euro's heading lower, and this is our 5 minute chart, here's our daily chart, here is our daily and hourly juxtaposed for that slightly longer term time frame. Dollar's heading higher. Generally, it's been doing that all morning long. Right now, you might say, is that because the dollar is strong and the euro's weak? We could argue that with Lagarde on the calendar, this is a little bit more of maybe euro weakness propping the dollar up. That's just how it works. Now, the closer we can get to 107, the closer we can get to some support on the daily, I am looking at the euro for a potential buy, just not yet. We know directionally where we'd want to be. We're just waiting for the pitch over the perfect part of the plate, right? Wait for the pitch, as they say. And I really believe that. That's very much how I operate as a trader. There are plenty of things that I want to do, and I would love to be as active as the markets will let me. Keyword on, we've got to let the markets say, all right, this is the spot from which you have favorable upside and you can control your downside, right? All right, finally, the ZB also heading lower. Also a market that I would like to buy, but this is right now indicating higher yields. Let's not forget, gang, we did a review in our mastery yesterday about where we are in terms of expectations for what the Federal Reserve is going to do. And this is not a surprise, gang. It's just a matter of incrementally increasing expectation that we are very much positioned, poised for a 5.25 to 5.5 target rate, which is arguably 2 rate hikes more than we would have expected, say, 3 months ago. 1 rate hike, 1/4 point rate hike more than we expected maybe a couple weeks ago. So it's a slightly more hawkish target rate peak. And I will say, we are not seeing really that much of a shift in terms of December being possibly when we cut or hold. So if the equity markets are a little upset, if bonds are a little weaker as yields go higher, if the dollar's a little bit stronger than we would anticipate at this part of the tightening cycle, it's because the tightening cycle is going to last a little bit longer than expected, but there is still the possibility of a rate cut come December. This is not optimism. This is not projecting. This is not guesswork. This is looking at the target rate probability via the lens of the Fed Fund Futures contract. So we're keeping this very much rooted in data, very much in a rate of change of that data, right? Okay, so with that being said, that is where we sit right now. Can't say we have a super clear look at what it is equities want to do yet, but hey, it's early, right? We don't need to pressure ourselves to start to predict the future at, 9:06 in the morning. All right. So let's get to the questions as always. Feel free to type in whatever symbol you are interested in. And the first one up, Kevin, Johnson and Johnson. Sure. J&J is a really popular symbol as a proxy in the sector secrets mastery the uh, for the healthcare sector. And the reason for that is because, let me just get these other charts out of the way. Here we go. It's really a great liquid option when sometimes the XLV is not exactly what we want. So if I'm looking on the weekly, okay, let's take a look at the weekly. And I'll do that here on our layout with the wave and grab and all that good stuff. Okay. And notice, by the way, gang, for simplicity, I know a lot of you, like myself, we've accumulated different indicators that give us an edge in terms of understanding market behavior over the months or years or decades, like myself. And one of the easiest ways to use all these indicators in the best way is have multiple layouts that are symbol linked. The very bottom of the screen, you'll see I've got I've got 4 charts in total. I've got my volume oriented chart, anchored VWAP, anchored V score. I've got my 34 EMA wave, grab, propulsion, Darvis on a separate layout. And then I have my hourly price movement ranges, my daily price movement ranges on yet a separate. So I'm not looking at a chart with quite as much spaghetti on it. And then I've got, of course, my multi. I hope you can see. Actually, no, you can't see that. Let me show you again. You see those 4 charts at the bottom there? That's what I'm talking about. Feel free to create multiple layouts for the same symbol so you could see it through a different lens, a lens of volume, a lens of price, a lens of volatility, right? Makes things really easy. And so I'm just switching over for Kevin's question here to that lens of price. On the weekly, Kevin, the closer we get to this Darvis zone, these are the best automated support and resistance levels you can put on a chart. And by the way, gang, they are free. It's a Darvis 2.0. And you'll see here, Kevin, the closer we can get to the 200 propulsion, yeah, the better, the better. I would focus on that for sure. And I like that as a buy. Oversold buy on the weekly stochastic, everything. I like that a lot. So thank you, Kevin. All right, Christopher asks, good morning. I came across something called a carry trade in my studies. Is this concept outdated or does it still apply to the market? Oh, sure. So carry, just to sort of undo the technobabble there, let's grab, and I love the idea of a carry trade. It's an interesting, more currency related idea. I'll show you right now. And that is when we go take a look at the different central bank rates. And that's what I'm going to. All right. Do you see the central bank rates down here, gang? All right. US is at 4.75%. Canada's at, the Canadian rates are 4.5%. Yen is a -10. So they're still in negative interest rates. Swissie's at 1%. Okay. The difference between the different central bank rates, if I were to borrow or sell yen, or I'm actually getting paid, and I were to buy US dollars, the difference in between those two percentages is the carry. So roughly in this case, 4.85%. The carry is that percentage that you get by having sold or borrowed yen to buy this higher yielding currency called the US dollar. Back in the day, I'm going to show you a graph here of the most popular, probably most talked about carry and why it was so popular. Now, I've been a currency trader for over 20 years, and carry is something that's very much part of the jargon of Forex. This is 2000. Look at this rate, 6%, 7%, right? Even more recently, it's 3%, but imagine at 6 or 7% to be long the Australian dollar and having then maybe borrowed or sold the yen, and that's your carry. Carry trades were very, very popular when these interest rate differentials were where there was a huge chasm between them. So is it outdated? No, it really just depends on what the different central bank rates are and if there's that differential between them. That's all the carry is. Now, I don't believe the carry trade is something that I would treat as a primary reason to be in a currency. I don't believe, but I consider it an added bonus. So if the Australian dollar Japanese yen is moving higher, meaning I bought Aussie, sold yen, I get the carry and I get the actual trade. So I get that percentage and I get the actual trade of the Australian dollar gaining against the Japanese yen. All right. So, Stacy, yeah, I'm feeling a little bit better. I'm still kind of congested. But does Brainerd's move up? Thanks for asking, Stacy. Does Brainerd's move up mean anything? I think yesterday it meant a lot of volatility. The the speculative dominoes that fall regarding the U.S. central bank structure, therefore possibly monetary policy, got interesting because now the question is, does Janet Yellen? No, none of all of this is speculation. But remember, the markets will act on speculation. They will react to it. So the question is, with her moving to that National Economic Council, does this potentially mean that Janet Yellen might lose her job? What does this mean in regards to monetary policy with Brainerd, a voting member, moving out of the FOMC? So there's uncertainty, and uncertainty is usually going to mean bearishness and volatility, and that's what it meant. So we'll see in the coming days and weeks what that actually does to the expectations we have as traders and investors about what they, the FOMC, are going to do with rates. So I think a lot of different concerns. Yeah. So of course it's going to be a lot of volatility. And I think we saw that yesterday for sure. All right, Prince, good morning. Is it possible to adapt my tools to a scalping style of trading? How would I balance risk reward, point of validity on a trade? Well, the second half is a big question. So let me answer the first one here. Is it possible? Of course, right? Structure still matters to a scalp. So scalping, let's start with time frame, right? The time frame on a scalp might be a tick, might be a 1 minute chart. It's a very short-term momentum approach. So if someone's looking to scalp, shorten the time frame, but then put the whatever indicators you want to use of mine, V-score, use the multi-trend for structure. Darvis levels are cool. Use the grab candles to understand those smaller movements. Now, I will say what's really interesting about your question, Prince, is it juxtaposes sort of where I am right now in terms of my trading. And we just got the registration page good to go. So if you haven't already heard, maybe you guys are hearing it first, next Thursday, so basically a week from tomorrow, we're going to be having a webinar. That means, yes, gang, I've got a class coming up. We're going to be talking about 1 hour time frames, daily time frames, which are kind of on the opposite end of the spectrum of a scalp. And the reason I mention that is last year, we did a lot of day trading. Mid-June to probably January, I focused almost exclusively on trading the current session and getting flat. Why? We were in a macroeconomic monetary policy spin cycle, just words, actions, confusion. Is inflation transitory? Is it not? It was a nightmare to expect that we were going to get follow through in a realistic way for days, if not weeks. And while day trading is cool and I do like to do it, my preference is for a little bit longer term time horizon, being able to take trades overnight and still control risk and yet expect follow through. And that just wasn't happening. What 2023 has given us, it's a gift. As of really late January, going into February, I don't want to be a short-term trader exclusively. In fact, we're still day trading, but we've limited that to the first hour of the day, which still is really, really effective. 9:30 to 10:35, I'll focus on day trading. But what a lot of my mastery members have noticed, and a lot of you have noticed, is we're starting to stretch those time frames out. We're starting to stretch those time horizons out because 1 hour time frames and daily time frames are giving us great structure. Case in point, we just scaled out of a trade in Nike just yesterday, right? And I still expect there to be some decent follow through. So we're getting a lot more selective about where we can find opportunity. We always have been, but now we're open to saying, hey, wait a minute, could we be a Nike for a few days and get a move from say 121 to 126, maybe even 129, which by the way is pretty much the trade that we have on right now, and scale out, pay ourselves along the way of a multi-day setup and trade. Yeah, that's really where we're at. So I'm actually stretching things out now. So I love the juxtaposition of the question, and you can go check that out next Thursday, simplertrading.com auto. And I love this link. I never know what the link's going to be for an upcoming webinar. The reason I love this link, auto, is because we've automated all the zones, all of it. So anyways, I can't wait to tell you all about it next week. Okay, next up is, would TLT be a good place as a stand-in for ZB to watch a play I mentioned in last night's video? Robert, yes. Yes. In fact, in the mastery and even for the futures traders in the simpler futures room, I do that quite a bit because one of the challenges to being a futures trader, it's really two challenges. One, as great as leverage it can also increase risk. And as great as futures are, I love futures. They can be, from an initial margin standpoint, how much you need to control a futures contract, they can be kind of pricey. So what a lot of times traders will do is we'll say, Rog, what about micros? And micros are great. And they are definitely more popular, and we're getting more micros. But if we don't have a micro for the symbol, like we don't for ZB, a liquid one, by the way, not just a symbol, but a liquid micro or even a liquid mini, we go with options on the futures, which can still be kind of pricey, or we go with options on the ETF alternative. So that is a resounding yes. For ES, I had 3 setups in that video that I talked about. For ES, it could be SPY or the MES micro. For ZB, absolutely, we could focus on TLT. You got it. You got it. Great question. All right, next up, Alex, it seems that the V profile hasn't been getting much love lately in my charts. Oh, no. Take a look at this chart right here. Alex, it's right there. Yeah, a lot of folks ask, Rog, where are the indicators? Gang, if I've ever taught or frankly sold an indicator to you, believe me, it's on my chart. And yeah, this is the sector slow stow, and there's the V score right there. And then I still have, as we mentioned earlier, I still have a volume max layout. So when we break down TLT, I'll look at it through the prism of volume. I'll look at it through the prism of volatility, HPMRs and DPMRs, and I'll look at it through the prism of price, wave, grab, Darvis, propulsion. Absolutely. So I have 3 different lenses that I can dissect a symbol through. And so then the question is, are we replacing the V profile or V score or anchored, any of the V tools with the ledges? Oh gosh, no, I wouldn't replace them. No. So whether it be V score, whether it be V profile, it's right there. Yeah. Whether it be anchored, anchored volume weighted average price, the anchored VWAP, or even whether it be, as you can see here, the Trendolorian, all those V tools are still there. No, because the volume ledges are amazing, Alex, but they cannot replace those. They can supplement it though. And that's what we have been doing. So any of those V tools, here is Trading View, and I will keep, let's see, I will keep right there. All right. So we can't put V profile on Trading View, and we really don't need to. Toss, Thinkorswim does not have this ability to put volume based on price on a chart as well as, Toss can't do what Trading View does so well. So Toss does need volume profile, that V profile that I have with the value area high, the point of control, and the value area low. On Trading View, we really don't need it. So I'll still use TradingView when I need that granular look at volume profile. I use the visible range volume profile, but they all work together, right? V profile, V score, anchored VWAP, they all work together to come together for this view, which is my volume max view. So Alex, thank you for the question. I never want anyone thinking that these are not, you know, always on my screen. They always are. Those of you who have seen my Instagram, you know I've got 9 monitors in front of me, and those 9 monitors have, you know, redundancy of tools. I'm looking at 6 to 7 symbols across them. You don't need 9 monitors, but you know it's sort of my job to keep an eye on everything because it's sort of my job to make sure, you know, I'm calling really good trades when we're in the mastery or whatnot. So I kind of feel it's my job to keep an eye on more, right? If I could add more monitors to keep an eye on more for everyone, I would. I absolutely would. Red Dragon, you just signed up. Oh, awesome. Yeah. So for those of you that are just joining, yeah, gang, we're going to be doing this next Thursday. This has been in the works for 10 months. 10 months. And actually, the indicator's been around for 10 years, right? For 10 years. And by the way, gang, yes, we have a class coming up, but I really want to explain to you all, excuse me, what we've been doing with the 1 hour chart, what we've been doing with the daily, why those are valid now and weren't as good in the previous month. So we're going to get into what is it that we're dealing with 2023. And, you know, maybe you have tools already that are doing the job for you. And this discussion of time frame, time horizon, and setups will just improve that, which would make me super happy. But if you're looking for automated tools, if you're looking for a strategy because you're still sort of struggling, this is what we're going to talk about. Just how much more busy we've been on that daily and on that 1 hour. All right, I know I've run over. So gang, as always, thank you for joining us for Charts and Coffee. I will see you all tomorrow, same time, same station. Check out yesterday's free video. I walked through a lot of those setups, S&P, Euro, and bonds in that video. And I'll see you tomorrow, same time, same station. My mastery folks, I'll see you in the room in just a moment.